As the finance world changes rapidly amidst dynamic and evolving business landscape, the use of AI and RPA is at the heart of that transformation. Before we go into the how to integrate, the following points showcase the need for AI and RPA. First, automating more than ever. We no longer just automating simple repetitive tasks. Now entire financial processes like invoice handling or month-end closing can run almost on autopilot thanks to smarter AI and RPA working together. Predicting the future, AI tools can now analyze data to predict things like cash flow or spot market trends, helping finance team to make better decisions before problems arise. The third one, smarter document handling. With AI, we can quickly scan and process huge volumes of financial documents, making things like compliance check and onboarding much faster. We can also have better fraud detection. AI is getting really good at spotting unusual transactions or potential fraud in real time, keeping both companies and customers safer. Last but not least, personalized customer experience. Automation let us offer instant payment, 24/7 support, and even tailor financial products to each customer's needs. Now, why do we integrate AI and RPA in finance? 1. Efficiency and accuracy. By letting machines handling repetitive work, our teams can focus on more strategic, creative tasks and receive far fewer errors. Cost savings and scalability. Automation helps us do more with less, keeping costs down even as we grow. The third one, stronger compliance. Automated checks means we stay on top of regulations and reduce the risk of costly mistakes. The fourth one is for better decision making. With real-time data and predictive insights, finance team can guide the business, not just report on it. Future-proofing. Embracing these technologies now sets us up to adopt even more advanced tools down the line. In short, integrating AI and RPA isn't just a nice to have anymore. It's essential for staying competitive, delivering great services, and driving innovation in finance. At Boost eWallet, this approach is helping us lead the way in digital finance. Let's start with the bigger picture. AI and RPA are really reshaping how finance teams operate today. Across the industry, we've seen AI bringing in advanced analytics, smarter fraud detection, and more personalized customer service, all while automating the heavy lifting of data processing and compliance tasks. RPA, on the other hand, is the workhorse behind automating those repetitive, rule-based processes. Just think invoice processing, account reconciliation, or even regulatory reporting, resulting in our teams spending less time on manual entry and more on strategic thinking. In our organization, we've embraced both. AI helps us make sense of massive transaction volumes, spot trends, and even predict customer behavior, while RPA bots handle the day-to-day operational tasks efficiently and accurately. This combination not only boosts our productivity, but also lets us stay ahead in a fast-moving digital payment landscape. A specific example of a use case is in relation to business planning. This is where predictive modeling, powered by AI, really shines. With all the data at our fingertips, we can move beyond simple trend analysis and start forecasting future user activity, cash flow needs, and even potential risk. For example, before a major festival, our predictive model analyzed transaction histories, user engagement, and external factors to anticipate spikes in demand. This lets us prepare our system, optimize marketing spend, and ensure we have the right resources in place, making our business planning much more proactive and effective. Ultimately, this approach gives us a clearer view of the road ahead, helps us manage risk, and ensures we are always ready to deliver the best experience for our users and merchants. Absolutely. Achieving a successful integration of AI and RPA in finance, especially in a dynamic environment like our organization, requires a thoughtful, step-by-step approach. Here's how we've approached it, along with some best practices that have proven effective across the industry players, even outside Malaysia. First, Start with a clear vision and leadership buy-in. It's essential to define what you want to achieve with AI and RPA, whether it's reducing cost, improving accuracy, or enabling faster decision-making. Gaining executive sponsorship ensures that the initiative has the resources and momentum it needs to succeed. In our organization, we made sure our leadership team understood both the immediate and long-term benefits of automation. Second, identify high-impact, quick-win processes. Begin by mapping out your finance workflows and pinpointing repetitive, rules-based tasks that are ripe for automation, such as invoice processing, reconciliation, or compliance reporting. Prioritizing quick wins not only delivers fast results, but also builds confidence and support for scaling up automation efforts. Thirdly, develop a roadmap and choose the right tools. Create a phased implementation plan that starts with pilot projects and gradually expands to more complex processes. Selecting the right RPA and AI platforms is crucial. They should integrate seamlessly with your existing systems and be scalable as your needs grow. In our organization, we partnered with experienced vendors to ensure smooth integration and ongoing support. And the fourth point, foster cross-functional collaboration and change management, including employee training. Successful automation is a team effort. Involve stakeholders from finance, IT, compliance, and operations from the outset to ensure all requirements and risks are addressed. This collaboration helps to break down silos and ensures that the technology meets both business and regulatory needs. Introducing AI and RPA can be disruptive, so it is important to communicate the benefits clearly and provide comprehensive training to your team. In our organization, again, we emphasize how automation would free up staff for more strategic work and offer hands-on workshops to build confidence in using the new tools. The last point is prioritize compliance and data security. Given the sensitive nature of financial data, robust security measures and strict adherence to regulatory standards are non-negotiable. We implemented strong access controls, encryption, and regular audits to ensure our automation processes remain compliant with local and international regulations. In our organization, we've found that a combination of strong leadership, careful process selection, cross-functional teamwork, robust change management, and ongoing optimization is key to a smooth and impactful integration of AI and RPA in finance. By following these best practices, we've been able to unlock significant efficiencies, improve compliance, and position ourselves for continued innovation and growth. In fintech like Boost, compliance and data security is one of our priorities in implementing AI. A single compliance lapse can trigger massive penalties. Compliance and security aren't afterthoughts. They are foundational to AI and RPA success. By embedding these principles early, our organization avoids regulatory penalties, builds customer trust, and scales securely. If you're considering starting the AI and RPA journey in your finance function, it is important to approach it thoughtfully to set yourself up for success. Here's how I would recommend getting started based on both industry best practices and example of how Boost does it. First, get clear on your objectives. Ask yourself, what are the main pain points you want to solve? Is it reducing manual errors, speeding up invoice processing, or improving compliance? For instance, Fleet Innovation, a company that automated its finance operations, started by targeting the repetitive task of purchase invoice processing. Their goal was simple: free up staff from manual data entry and improve accuracy. Next, secure leadership buy-in and form a strong project team. Having support from senior management is crucial, not just for funding, but also for driving the cultural change needed. Bring together a cross-functional team from finance, IT, compliance, and operations. This ensures you cover all angles from technical integration to regulatory requirements. Then, take a close look at your current processes. Check your IT infrastructure to make sure it can support new automation tools. You will also want to review any regulatory obligations like data privacy laws or financial reporting standards to ensure your approach remains compliant. For example, banks automating KYC processes need to be extra vigilant about data security and audit trails. Choosing the right technology and partners is another key step. There are plenty of RPA and AI platforms out there. UiPath, Blue Prism, Automation Anywhere, just to name a few. Look for solutions that fit your business needs and can scale as you grow. Econo Bank, for instance, use UiPath to automate credit application processing, which not only improve efficiency, but also compliance. Start small, then scale. Begin with pilot project. Maybe automating invoice entry or reconciliations. Test thoroughly, gather feedbacks, and refine your approach before rolling it out more widely. This is what Fleet Innovation did, and it helped them build confidence and expertise before expanding automation to other areas. Invest in training and change management. Your team needs to understand how to work with the new tools and see automation as an opportunity, not a threat. Encourage open communication, provide hands-on training, and celebrate early wins to build momentum. Finally, keep monitoring and improving. Once your bots and AI models are up and running, track their performance, listen to user feedback, and make adjustments as needed. Over time, you can expand automation to more complex processes and integrate advanced analytics for even greater impact. In summary, launching AI and RPA in finance isn't just about technology. It's about people, processes, and a willingness to adapt. By starting with clear goals, building the right team, choosing suitable tools, and learning from each step, you'll set a solid foundation for a more efficient, accurate, and innovative finance function.